Most agents have a gut feeling about which lead sources work. That gut feeling is almost always wrong. The source you think is your best one usually isn't. And the source you've been quietly ignoring is often your highest closer. The only way to know which is to track it. Not in your head, in your CRM. This training walks you through how to set up a lead source tracking system inside whatever CRM you already use. The goal is simple. Every dollar you spend on marketing should be tied to a number that tells you whether it worked. Every hour of free time you spend on referral coffee meetings should be tied to the same number. Without that, you're guessing. With it, you make every renewal cycle smarter than the last. Here's why this matters. The average producing agent runs 3 to 5 active lead sources at any time. Maybe one is paid, maybe one is referrals, maybe one is a community event, maybe one is your monthly email. The temptation is to keep all of them running because each one feels like it produces something. But producing something isn't the same as producing return. When you track properly, you almost always find that 1 or 2 of those sources are quietly carrying the others. You shut down the dead weight, double down on the winners, and your income goes up without working harder. The fear most agents carry is that real tracking is going to be complicated. It isn't. A lead source tracking setup that works for a solo agent or a small agency takes about 90 minutes to build, and once it's built, it runs in the background of every appointment you take. Before any of the setup, 3 things you need to be honest about. First, lead source has to be captured at the moment of first contact, not reconstructed from memory 3 weeks later. If you wait, you'll guess, and your data will be useless. Second, every lead gets a source even if the answer is unknown. Unknown is its own category, and watching unknown shrink over time is a sign your intake is improving. Third, source is not the same as channel. A senior who heard about you from a friend who saw your Google business profile is a referral, not a search lead. Capture how they actually decided to call, not where they originally saw your name. Now the setup. There are 4 parts to a working tracking system inside a CRM. The lead source field, the conversion stage stamps, the cost per source input, and the monthly review. Start with the lead source field. Almost every CRM has a default field called lead source. Most agents either leave it blank or fill it in with whatever word comes to mind, and the data turns to mush. Fix this by replacing the free text default with a closed pick list. A pick list is a dropdown of exact, predefined values. Same options for every lead, every time. No typing, no variations. Build your pick list with 5 to 7 categories that match how leads actually reach you. A workable starter list. Referral from client. Referral from professional. Google search or Google business profile. Local event or workshop. Direct mail. Paid online lead. Carrier supplied lead. And one called other or unknown for anything that doesn't fit. That's it. Resist the urge to make it longer. The shorter the pick list, the cleaner the data, the easier the monthly review. If your CRM lets you make lead source a required field on the lead record, do that. Required fields force discipline. Optional fields get skipped. 80% of bad lead source data comes from leaving the field optional. Once the source field is set up, add a second required field called source detail. This is a free text or short list that captures the specific within the category. If the source is local event or workshop, source detail is the name of the workshop. If it's referral from professional, source detail is the name of the partner. If it's paid online lead, source detail is the specific vendor or campaign. The category tells you what kind of source. The detail tells you which one inside that category. Both numbers are useful in the monthly review. Once your lead source field and source detail field are in place, the second piece is conversion stage tracking. A lead source by itself only tells you where the lead came from. What you actually need to know is how that source performs all the way through the funnel. Your CRM should let you stamp every lead with the date it moves into each stage of your pipeline. At minimum, 4 stamps. The date the lead came in, the date the first appointment was set, the date the appointment actually happened, and the date the policy was placed. 4 timestamps on every lead, regardless of source. Those 4 stamps unlock the only metrics that matter for source comparison. Lead to appointment rate, appointment show rate, appointment to close rate, days from first contact to placed policy. When you can pull those 4 numbers per source, you can finally answer the question every agent has asked at some point. Is this source actually working, or am I just busy? Set this up so the stamps happen automatically wherever your CRM allows it. Manual data entry is where lead tracking dies. If your CRM can trigger a date stamp when a lead status changes, use that feature. If it can't, build a 30-second checklist you run at the end of every appointment. Either way, stamps happen the day they happen, not at month end from memory. The third piece is cost per source. This is where most agents quietly avoid the truth. You need to log every dollar spent on every source, and the easiest place to put that data is a single field on the source itself, not on the lead. If your CRM doesn't support that, keep a simple tracker that mirrors your picklist categories with 1 row per source per month and 1 column for spend. What counts as cost? Direct mail and postage, paid online leads, carrier-supplied leads if you paid for them, workshop costs including venue, food, and invitations. For referral sources, your time matters too. Assign your hourly opportunity cost to any meeting time. If you spend an hour a quarter with each of 5 referral partners, that's 5 hours a quarter at whatever your hour is worth. That lets you compare a referral relationship honestly to a paid lead source on a cost per acquisition basis. The fourth piece is the monthly review, and this is what turns the system from a data exercise into a business decision tool. Once a month, on the same day every month, you sit down for 30 minutes with 1 report: leads per source, conversion rate per source, cost per source, cost per closed sale per source, 4 columns, 1 row per source. The first time you run that report, you will be surprised. The source you thought was carrying you turns out to be average. A source you almost shut down turns out to have the best close rate. The paid lead vendor you've been complaining about is either cheaper per closed sale than you thought or far more expensive. Either way, now you know. Here's what running the full system looks like in practice. An agent set this up over a single weekend. She built a closed pick list with 7 categories, added a source detail field, set up 4 conversion stamps tied to her pipeline stages, and started a monthly spend tracker. Total setup time, just under 2 hours. 3 months later, she ran her first real review. Referrals were producing closed sales at about $45 in time cost. Paid online leads were costing $260 per closed sale. Direct mail sat at $110. And her local workshops, the ones she thought were too time-intensive, were producing closed sales at $65 a piece, including venue and food. Armed with that data, she made 3 decisions in 1 meeting. She doubled her workshop frequency from 1 a quarter to 1 a month. She cut her paid online lead spend in half and moved it into direct mail. And she set a target to add 1 new referral partner every month. 6 months later, her cost per closed sale across the book had dropped 30%, and her volume was up. None of that came from working harder. It came from finally having the data to make calm, math-based decisions. Common mistakes to avoid. 1. Treating the system as optional. It collapses the first month somebody types the source field instead of using the pick list. 2. Reviewing too often. Weekly is noise. Monthly is signal. 3. Killing a source after 1 bad month. A source should underperform for 2 consecutive cycles before you cut it, because seasonality and small samples can make a strong source look weak in any 1 month. Okay, here's your action step. Open your CRM and look at your lead source field. If it's free text, replace it with a closed pick list of 5 to 7 categories before you take another lead. Add a source detail field next to it. Make both required. That single change, made today, is the foundation of every report you'll run from here on. Everything else builds on it.